my time.
Okay, g'day, Rudy here. Now the reason I started this channel, because I retired at the beginning of this year, and I still am fascinated with the markets, so I want to still get involved. But I came across YouTube, investment ideas, and everyone's selling. Well, you could buy the VAS VGS combo. Everyone's selling the VAS VGS combo. Buy VAS for the Australian market and VGS for the international market. And then today, Motley Fool start talking about VGS, and I had to. Okay, so that's why I'm doing this video, because it's everywhere. Even the professionals are telling you get into VGS for diversification. Like you see here, it tracks the MSCI World Ex Australia Index. They're good, tick tick. and they even throw in there, look, this United States, Europe and Asia, but we'll soon see what percentage that actually is. You get access to diversification. You get stocks like Apple and Microsoft. Oh yeah, everyone knows that name. Johnson & Johnson. Oh yeah, everyone knows that name. Safe. Nestle. Yeah, know that one. So there's certainly a lot to like about the VGS. Should you invest? Pick. Then they want you to basically go off to a link. Alright, so let me tell you the truth, people. VGS. Okay, so VGS tracks the MSCI World Ex Australia Index. 80%. Oh, here we go. See, it's 80% of the index is US large caps. Okay, so it's basically a US fund, like an S&P 500. So VGS isn't a diversified international ex-Australia ETF, it's a US ETF. Because look over here, in terms of market cap, America 60 trillion, Europe 18 trillion, Asia Pacific 40 trillion. So America's 50% of the total. Well, outside of Australia is nothing anyway. So so it's 50% of the world. And just to prove that VGS is basically S&P 500, there's a chart of the S&P 500. So have a look again. They look pretty similar, don't they? Anyway, my call on VGS, the red arrow there, was a sell a month ago, because it's hit the top of the uptrend channel on both the long term and the short term. So it's going to correct. But that's not the purpose of the video. So it's all America. So what's it missing out on? Okay, so this is the all world ex-US index. So this would be, like if you're sitting in America and you're full of S&P 500 or you're full of US based stocked ETFs, then you jump into VEU for your international diversification. Like people here jump into VGS for international diversification. And in America that makes sense, but not now. So VEU is essentially missed out of VGS, if that makes sense. So VGS is all America, and it's really missing out on the exposure to VEU, which for the last few years has been a winner, because America's outperformed VEU, even though that looks pretty. But we're now getting to a stage where VEU is going to overtake VGS. So what we're looking at here is a combo of the VEU price over the VGS price. So what that means is, with the chart going down, VGS being the denominator for the maths people, so VGS has been outperforming VEU over the last well, last few years since 2018. But it looks like the tide's about to turn. So when this starts going up, it means VEU is going to outperform VGS. So it's, if you didn't even know what this was, you'd say once it passes this horizontal line, and definitely past that, then VEU is going to kick VGS's ass. So my rant of the day was really that VGS is not a diversified world exposure for Australians. It's basically exposure to the American market, and it's missing out on the other markets, Europe and Asia. And I intend to do a few more videos on this one, because when you drill down into it, the emerging markets, which is a subset of VEU, is kicking ass, you could say. But I don't want to complicate things. So today was just to prove to you that VGS is not the answer to getting world diversification. All right, I hope that all makes sense for you. Leave a comment if you disagree. All right, thanks for that. See ya.